I have a feeling you guys are going to go at it, and I'm going to try to mediate.
But Illia's going to tear it apart and rip me a new one, as well as Rob. So that'll be fun.
So the answer there is actually users, right? At the end, it's all about users.
Welcome back to the Roll Up. For today's episode, we had Illia on from Near after he saw one of my tweets saying that every app will eventually be their own chain. He pushed back on that idea throughout the first half of this podcast and really illuminated why he believes this is a flawed model. It was really interesting to be able to go back and forth with him for about half an hour and kind of hear his perspective. Throughout the second half of the podcast, we talked about why AI matters in this conversation and where the impact of AI comes in. We talked about the future of user-owned AI and why Illia is so passionate about this sector of blockchain. We really enjoyed this conversation. Hope you do as well. Let's jump right in after a quick word from some of our awesome partners.
Cartesia is your home for app-specific rollups. At the forefront of developing new tools and platforms that enhance the capabilities of blockchain technology, Cartesia enables applications that are flexible and built to scale. Build on a full Linux environment and use traditional software libraries, but in blockchain development. Go to cartesia.io, that's cartesia.io, to learn more about building your own app chain today.
Welcome to the Ignition, Mantle's newest campaign to liberate the growth power of Bitcoin. FBTC Ignition has officially begun with a total token supply of over 2,000 FBTC with a TVL of over 150 million. Right now, you can go on the FBTC website to see all of the featured campaigns, staking opportunities, and liquidity pools where you can utilize FBTC on-chain today for some of the best yields available on L2s. The Ignition Sparkle campaign can be found at fbtc.com/ongoing-campaign.
What's going on, guys? Welcome back to the Roll Up. Today, we are talking about why every app will eventually become a chain and why sharding is not going to work for that, or at least that is my perspective. But Illia's going to tear it apart and rip me a new one, as well as Rob. So that'll be fun. And yeah, Illia, second time back on the Roll Up. So happy to have you back. And yeah, man, how you doing?
Yeah, thanks for having me. I'm doing pretty well. We've had a pretty amazing August so far with launching chain signatures and Nightshade V2. And so now, I'm ready to talk how the future will look like. And we have also tech actually there.
Yeah, we had Kendall on to talk about chain signatures, and he gave the approach of chain abstraction in that perspective. And so maybe we'll touch on that a little bit, but yeah, I have a feeling you guys are going to go at it, and I'm going to try to mediate. So,
yeah, I mean, I had this angry man in the comments here, basically saying that like sharding is going to be better scale than any single chain. And I kind of responded here, but I think there's even like a bigger tweet. But I just want to explain my perspective first, Illia, if that's okay. And I know this tweet is like pretty polarizing, because it's like very like black and white, which is never the actual case, but is great for engagement bait, I think. But like my general idea here is like, okay, so if you're an application on Ethereum L1, if you're an application on a L2, if you're an application on even like something like a very highly performant L1, you're giving away in exchange for composability and network effects from other apps on that, kind of like universal chain. You're giving away like a ton of sovereignty by means of sequencer revenue for L2s, by means of controlling transaction ordering, by means of having to worry about whether or not there's going to be certain events on these chains that are going to cause the experience on your app to be kind of problematic in the sense of like non-parallelized chains. And I mean, there's kind of a whole host of reasons why application builders, I think, should be launching their own chains from that perspective. I just think that people that are building chains or apps on universal chains are thinking like a tenant who is renting a property from somebody rather than like a landlord who is accruing equity over time. It's like you're paying to be there rather than owning and kind of earning with the kind of value of your block space. So I'll just pause there, and that's like my general take. Now, I think there are instances where this may not make sense, and I think this tweet is pretty kind of black and white, but I'd like for the purpose of this to kind of stand pretty strong on this and not just give in. So yeah, Illia, definitely curious as to if you could explain your tweet a bit, and yeah.
For sure, yeah. I mean, my response was like very specific, but yeah, I mean, I think there's like a whole spectrum of things to consider. And the specific thing that I wanted to, start with is definitely the reality is every single like single chain tech right now is actually non-scalable, right? And I think like every time one of those chains actually starts to get to a level where they actually have users, they have a ton of trouble, right? The base is a good example recently. And like there are a few examples before as well. And so the challenge is like none of that, OP Stack, Arbitrum, like that, or even Cosmos kind of SDK is actually able to handle like million plus, or like, I mean, even for example, 10 million users, right? And if we are talking about like truly building kind of, next generation applications, that's a scale we need, right? So how do you do that? Well, you do need, like, you just cannot fit all the user data and all the transactions on a single machine. Like that's what all this kind of approaches do. And you can buy a bigger machine for sequencer for your L2, and kind of potentially scale that way, plug in more SSDs. There's actually like actual limitations on how much SSDs you can put on one computer. But that's kind of the story there. Or you can actually go the way that actually scalable applications going, which is sharding, right? And so this means like, okay, well, you need a sharded blockchain to achieve this, and the response kind of here would be like, sure, let's just grab near for my application, right? Let's just have a near instance per application, problem solved, right?
Near Appchains.
And
near
so the question
chains. So basically Appchains. So basically apps
no,
having their own chain.
I'm gonna get you there, but I'm just saying like that. I'm showing you right away your argument, right? Which would be like, let's just have a sharded blockchain per every application, right? And so the answer there is actually users, right? At the end, it's all about users, and the kind of like I like this argument of like, hey, you trading off sovereignty, but the thing is like, this is not your sovereignty to trade off as a developer. You're actually providing a service to the user. This is their sovereignty to trade off. And the fact that you have an app chain that now you're controlling your user's sovereignty is actually the opposite of what users truly want. Users want to have all of their state as kind of composable and as close to each other and under the same correctness and guarantees as much as possible, right? I think that's to me, that's actually the fundamental trade-off, right? And so, and as we doing the sharding and doing all those things, like you want to have that trade, and that's why I also think the layer twos are kind of have this limitation as well, because now you have all the different levels of sovereignty and security, and who is responsible for what. This is actually back in 2019 when we were interviewing Zaki for Cosmos for the whiteboard. That was exactly the example. Like, I have my CryptoKitty that I own, but it was bridged from a different app chain. Who is responsible for this, right? Like, now I, as a user, lost my sovereignty, like lost part of the sovereignty of my assets, right? And so this is why, like, for us, it's all about this kind of, the core value we provide is users owning their assets and data, right? And so everything we do is kind of, how do we maximize that and kind of minimize the leakage of that for the user. And so in a way, developers are just facilitating that by building more protocols and more software. They themselves don't need, like, as a developer, you don't need sovereignty. You need to have a best developer platform that is, easy to run on, and then you can give users the functionality. And so where this gets, practically speaking, right, is integrations, right? Okay, cool. You launched your own let's say even sharded blockchain, well, now you need to integrate everything. And again, as a user now, this doesn't work, it's not, it's not propagated there, it's not in those wallets, right? You are losing kind of all of the like user state that I cannot easily bring. And we are actually solving some of this. This is why chain signatures are being a big push, is because we're trying to solve some of these problems kind of on a Web3 scale. Like, how do we actually make it such that user has their own account that can actually transact on other chains? But again, like every time you launch a new thing, like it still has different set of parameters. It still has different kind of additional latency for transacting with it. Still has RPCs going down, indexers, etc. And so the other question is cost, right? Because this cost at the end is cost that beared by user. And right now there's VCs kind of funding everything, so it's a little bit hard to be properly evaluating this. But you can go back to the math, right? Like user paying for a transaction, right? That cost needs to cover validators running it, whatever settlement, whatever the DA, whatever the guarantees you have there, all the integrations, all the software maintenance, all the SREs that are sitting there running validators, and all of the other costs that kind of, and there you have a very much so benefit of having all of that on the same shared platform, right? Like the more kind of people transacting, the reality is even now, even on very used platforms, right? Like we're still subsidizing kind of all of those costs. So every application just will always be underwater. And we see this right now, right? All of these applications, they're using their token incentives, but the reality is there's not enough revenue being made, even with sequencer revenue, etc., to do that. Now, sequencer revenue, MEV, etc., all of that is addressable per specific use case, right? So, for swaps, we're all going into intent-based swaps. The intent matching is happening off-chain. You already don't have on-chain, validators cannot capture MEV. There's all kinds of ways. I mean, we discussed with Tarun on Whiteboard how to do MEV protection for Uniswap MM pools as well, where you satisfy mint price and you take off difference to your stakeholders instead of to MEV bots. So all of this is solvable for a specific use case. And you can actually, again, so the costs are kind of shared between all the applications. The sovereignty is given to the user, and the kind of revenue, etc., can be generated in a more systematic way with all the integrations to exchanges and all this stuff, right? It's still super hard to get new things going, right? Even if it's on dexes, because somebody needs to list that and bridge that, etc.
Yeah. Okay. So a bunch of really, really great points there. Kind of the first being that this idea of sovereignty for developers to build in their own playground, their own sandbox, so they can make their own money is it's looking at it from the wrong perspective. We should be optimizing for what the users really are after. And what the users want is this experience, which is composable, which is fluid, which is easy to operate in, and doesn't require kind of the annoyances of what one could say as I guess cross-chain interoperability as we know it now.
And importantly, the user wants kind of the same level of security, right? You don't want you as a user never want a reason about security. That's not something that you sit there is so 17 validators, is that bad or good? Oh, what's a Nakamoto coefficient? Is that's not do they have all the audits?
Yeah. Okay. And the kind of on the more economic side, the idea of running your own kind of system, whether it be consensus and your own nodes and your oracles and your RPCs and your block explorers and your all these different things for individual chains. It basically part of your point is that in a world right now where things are very kind of pushed up by early stage funding, that this kind of is just being absorbed by teams and isn't really a consideration. But in time, when we need to reach real revenues and kind of product market fit, the idea of everybody having to pay for all this own infrastructure is kind of problematic from a perspective of why not just do shared costs across an entire spectrum of apps and users and developers and team. Okay. Okay. So like both of those points. So, okay. So on the second point, I have this thesis, and I think a lot of people share it, that like the cost of infrastructure in software is basically going to trend very close to zero in crypto, where the cost of all these different like operations is kind of akin to like what software is in like on your phone or like a mobile app, or like even just like Twitter as an example is free. All these different kind of like software applications are free. And so why not the infrastructure for crypto to be kind of trend towards zero as well? And just as different teams are kind of commoditizing each other, that the cost of running a chain, what is today was much less than what it was yesterday and will be far less tomorrow. And so I think that's kind of like what I would retort with regards to the cost idea. And then with regards to like the composability and security, on the composability side, I think what we're addressing right now is like the state of rollup interoperability and like chain abstraction as it is today, which again I think is like is what it is. But I think it's like we are very close to like at least getting some sort of standard in the Ethereum space, and I think in the broader crypto community having these kind of like true chain abstracted UX. So it's hard to make that argument now today. But I think that like in the world of user experience perspective, while having your own a ton of app chains may never equate to just having like one chain, the experience is going to be far better than what it is today, and we'll be solving kind of the first broader issue that you brought up with regards to like the single state machine not being able to kind of scale. Now the security is kind of like another question, right? Like, is a centralized sequencer in today's format better or worse than a L1 with a small validator count? I would argue it's probably worse. In the future, with decentralized sequencers, is it better? I'd probably argue that some sort of decentralized coordinated block building is probably better than an L1 with low validator count. But that's kind of a tough one to get over. But it does seem like the points that I'm rooting on, like my current thesis on, are kind of pushed out into a future view of the world rather than what it is today. Whereas it seems like where you're coming from with regards to kind of near sharding design is very much like this is here and now, and it's happening. So perhaps there's a difference of timeframes in our views, but also definitely curious to understand your perspective on those kind of on those two pushbacks.
Yeah. And I appreciate those. So the cost one, indeed, like the cost right now is immense, right? Like running a fully rolled out, your own chain is like anywhere from probably 20 million a year to 100 million a year, right? Depending on how much integrations and kind of how much like auxiliary stuff you need to have. And like if you have a separate VM or kind of more like you sharing the tooling, right? And I think the interesting thing was like like roll up as a service and similar things, which are kind of like, okay, well, we just have like one set of tooling that we're gonna run on every chain, and so you can imagine that like some of this will get unified, and it's like you still get some economy of scale, even though at least like developers developing the same stuff for all the rollups. The thing is like then you're kind of losing all of the sovereignty, because like if you modify your EVM, now everything broke, right? And so now you need to like fork everything and hire engineers to do it. So I think that the important part here is really it's about this trade-off between how much it costs to change things and innovate, right? Because if you're using exactly the same stack, you like just clicked fork, then the cost is probably way lower, because indeed the cost is. Now, if we're talking about the future, we have the second part about AI. We'll talk about that, how a lot of these things will indeed change. But I am talking about kind of now, like because kind of the question is, as you're an application developer, you kind of need to decide what to do now. And especially as you're planning to scale, what do you do now? I think is really, again, now and like for next year is really important. I agree that like things will change, but in a very different way because of AI, and we'll talk about that. So and that's why like the costs are like pretty tremendous even for layer 2, right? It's like $1 million a year at least, in the infrastructure, in auxiliary infrastructure. I'm not talking about DA costs or anything, right? Which, you can use Nuffle Labs and get very cheap DA. Not to plug Nuffle. But yeah, I think the cost of some of these things will go down. But if you want to innovate, if you want to change something, if you want to have that sovereignty that you like want to pay for, then it's gonna, you will need to have that cost added up. The kind of the design with Nightshade we're bringing in also allows you to have your own shard, right? So you can have like as much compute as a shard as any other chain would have. So you don't have the same kind of problems of some other app got popular and now everybody's struggling with that. And at the same time, you can also flip it and have sharded smart contracts, right, which are available in every shard on the user account and have state together with other sharded smart contracts and user information, right? So you kind of like what we try to do is actually flip the script where it's user's information and stored on user's account. And so when you're building applications, you're actually storing them on users in user's state. And I think that is also fundamentally kind of moving us in a direction like of that vision where user own everything. And then you just have kind of state synchronization smart contracts, which are defining the rules between kind of how we peer-to-peer transact. Now, not everything can be implemented like that. There will be still shared smart contracts and they can live in dedicated shards if needed. And so going to interoperability, again, we work on chain abstraction. Like we will make it work between all the layer 2s and chains, and Bitcoin and Dodge and Litecoin. Like this is all coming. We have like a ton of interesting applications on that. But again, it always comes with latency. It always comes with additional risks as well, right? And so, for example, we're designing one of the kind of intents-based DEX, and you need to consider the fact that some chains will go down and disappear, right? The layer 2s will shut down. Maybe some layer 1s will just stop, right, for a few hours or longer. And so, how do you like deal with those situations? What do you do? What if person deposited money on that chain and wants to withdraw on a different chain, right? So all of those situations need to be handled. This is not something you need to deal with when you're building kind of in a single environment. So I think it's indeed like longer term, we're gonna change things, and you can imagine like, okay, cool, I want to start my own like server with my own app. Like that feels like a right model, but because your users are not there, right? The users want to contain state within there. That's the whole point we're offering with user ownership, and the fact of like integrations being so much more complicated. I just don't think that's a right model. And again, we see like people who are actually starting new chains, it's very infrequent that they end up building like truly innovative products, right? There's only like few probably that are, because they spend so much work on building the chain, right? You end up just like spending so much effort there and building the ecosystem, etc. Now, economically right now, obviously there's a premium for doing that. And so people are rewarded. But if you're truly building an app, right, you should be focusing on product, on end user, on figuring out and maximizing how much kind of how much impact you can get to the end user. And using shared infrastructure is just so much like easier, cheaper, and for the most part the trade-offs are there to get you going in a successful way.
Yeah, I think our ideas like converge in the sense that you see like the way that like Near's model isn't just like, okay, let's just max out a single L1 and just kind of scale as much as we can with kind of like one state. Like sharded user accounts allows you to kind of like, basically what you're saying is like Near is solving like Near has solved what Ethereum is trying to do right now in solving its interoperability problem just by sharding at the L1 layer instead of having to launch all these new chains. So like the same idea of horizontal scaling is like applied. It's just that in the kind of modular world, in the Ethereum kind of roll up world, putting them together has been way more difficult because, well, they're not touching the same state consistently like they are in Near's model. But you guys have basically achieved what that kind of is
the
aiming
original,
for.
yeah, the original
Correct.
thought process was, 2018.
Yes.
ETH2 circa 2018 is Near.
Yeah, and so somehow along the way we got lost there in the Ethereum land, which is what it is. So yeah, I mean, I think there's quite a few incentive misalignments that you alluded to. I think one being like the valuation game, the investing game of launching your own chain, as well as just kind of like, that idea of we can, make money off the sequencers and things. But again, if the fees in crypto trend towards zero on Infra, then you got to think like fees on rollups, fees on L1s, L2s are also going to trend towards zero because that's just the state of kind of using anything. Again, like would you pay to send out a tweet every time you tweet? I don't think so. Right. And so like, or maybe you would, I don't know if you got enough economic value from that system. And so I think like in that sense, like these applications have to create real ways to make money and not kind of rely on their kind of like sequencer revenue. But yeah, I'm kind of once again seeing that, okay, the vision is the same with regards to how we scale. We can't scale single state machines. We must kind of scale out in this like sharded, in this roll up, in this horizontal way.
But let's build it with interoperability first.
Yeah, with interoperability first. Well, that's the big problem is that people in Ethereum land are like, okay, guys, it's been like what? If Ethereum was around 2016, so it's been almost 9 years, and we still haven't really figured this out. And so that's kind of like the question here.
There's, by the way, one fundamental difference that we've done on Near is that we have a single state space. So on Ethereum, every single kind of roll up is a copy of a state space. And so you have Aave on everyone, you have Uniswap on everyone, you have my account on every one of them. Instead, we say, hey, it's single state space, right? We sharded, we split it into kind of cohorts and like they communicate with each other. We can split it differently every 24 hours. But because of this, it means like you have one account, right? And you're just communicating with everybody else. And so you can still mimic a lot of the same stuff. Like you can have multiple Uniswaps or whatever if you want. But like you now don't have this problem that like everybody's trying to copy the same thing everywhere.
Yeah, I mean, I do think that's the problem of not having interoperability baked in from the beginning. Like each ecosystem can have like its native DEX, its native lending market. But like, if chain signatures work, if Zion's formula works, if Agoric gets orchestration right, and all these different interoperability things come online, having a DEX on one chain is going to be no different than having a DEX on another chain. It's going to just be a DEX. So it's like there's no edge there. So like that's going to be a whole cycle of kind of getting rid of the recycled products that we've seen as well. So like, as an investor, there's no really value proposition to investing in the first DEX on a chain theoretically, because the chains are just going to be abstracted anyway. So it's just going to be a DEX. You're just going to end up using the biggest one.
Well, you're going to use like overlay pretty much that can route through any whatever underlying pools, which are like both off-chain and on-chain through that's kind of what intent-based architecture for DEXs allows you to route liquidity through anything, right? Oh, you have better liquidity on Binance right now? Cool, we'll just like match you there. It's better on whatever, 7's layer 2, like in 5th pool. Cool, right? We'll do this. So
exactly.
It kind of unifies this space, But it removes all the like sequencer rollups and like all the MEV, etc. Because now like that is happening kind of off chain. You're running an auction, pretty much saying like, hey, I'm willing to do this. Who can fill me with the best price?
Yeah, but that's what we want. Like we don't want rollups in the Ethereum space. We don't want like these different chains, Appchains, general purpose to like be like headbutting each other, infighting, doing all this games with each other. Like we just want if if $10 enters into crypto, we want that $10 to be able to go and be used where it is in the broader space, not like fighting over, that user or that one. Like if we get 100 users into crypto, that liquidity should be able to be distributed amongst whatever chain that those users want to use applications on. It shouldn't have to be like I come to a chain and I use that chain and then other chains have to fight for my liquidity with these games and things. It should be, if I want to use this app on this other chain, I just go there and it's just my liquidity's there as well. So I think chain abstraction, I think you've talked about this, Illia, has bigger ideological impacts than just a UX impact for the way that people are going to be building in the space. And I think we're kind of touching on this a bit.
Exactly. Yeah. I mean, I think it changes your, like, instead of having this argument is like, oh, should I launch a separate chain or not? It kind of changes this argument away from, because like the reason to have that argument right now, right? I mean, we talked about sovereignty and other things, but it's more around like, oh, if I launch my own chain, I can get a better valuation, right? That's where like a lot of this right now, like, oh, layer 2's got like premium, layer 1s were giving premium before, right? So like, let's do this.
Is that why Near launched its own chain?
I mean, so the honest thing was, this is 2018, right? We looked at a lot of blockchains. We obviously, Bitcoin, Ethereum. We originally wanted to do like payments for crowdsourcing for data, right? We actually wanted to build, like what would be a version, like a Gitcoin style, few generations before what Gitcoin was, like paying for work for people, like, and kind of allocating that. But, we looked through all the blockchains, none of them actually would work, right? None of them would scale, none of them would be cheap enough, none would be easy enough to onboard new users. And so we're like, cool. We then went and talked to Ethereum folks as well, and we're like, oh, you guys are thinking about sharding. We can do sharding. We can build sharding. Like my co-founder built sharded database. I worked on a lot of kind of scalable stuff as well. We had like a bunch of folks we could bring. What do you guys think? Should we like build it as part of Ethereum? How would that work? And the answer was, there was no like way to make that decision to kind of get external team to build something, at least at the time. And so, yeah, we ended up kind of, and we had already VC funding from before, from when we were doing AI stuff. So we needed some like VC backed model. So indeed, like the incentives of, VC backed model led to that. If there was a way to just like contribute to Ethereum and receive part of Ethereum, like allocation, for example, Ethereum supply for doing that, I would actually prefer to do that. So having such a mechanics, I think, is very important.
That's the thing about the lack of a kind of like a top, or a bottom up, I think is what they call it, like setup for Ethereum, rather than having like a single, like, kind of way of coordinating. It can be a little dysfunctional. Now, let's kind of shift gears into the AI. Rob, would love for you to get involved here as well. Illia, why does none of this conversation matter in a world of AI in the next 2 years? Why did we even just spend 30 minutes talking about this?
Welcome aboard on our journey into the singularity. This is the Endgame roadmap for Frax and Fraxtal, the new L2 out of the Frax ecosystem that is totally based on fractal scaling. Fraxtal is a modular L2 blockchain built by Frax with modular and fractal scaling in mind. Fractal scaling is based on the Mandelbrot set of fractal images, and it explains how L2s become L3s and the entire Appchain lifecycle goes through its evolution. The Frax ecosystem is made of some of the top builders in the space and has stemmed from its OG days of the Frax stablecoin. It is now in the LST space, the LRT space, and this Fraxtal L2 joins the existing suite of Frax products, including Frax Swap and Frax Lend. You can see Frax Ferry, the bridge to go from any chain, Arbitrum, Optimism, or mainnet into the Fraxtal mainnet. bridge your tokens, and bring your Frax assets into the Fraxtal ecosystem. Join today to get the best out of Fraxtal. You are still early. Join today. Take part in our expedition into the singularity.
No, so I think, to be clear, like a lot of those things actually do matter. I think some of the accent will be changing, and some of those things is actually hard to predict. Even as we're working through it, it's kind of hard to see what things will happen at what timeline, right? And again, this is like I worked on transformers in 2017. In 2017, we thought is like, okay, this is happening, shit is here. And then it took like 4 years for this to mature, to scale. And we're a couple of years in, and like we see the progress, we see the momentum, but we're still like, do we have AGI tomorrow? No. Like, will we start ramping up into a lot of interesting things over the next couple of years? Yes. So so I think maybe just on the AI side, there's probably two important concepts. So one is we've been talking a lot about is user ownership, right? So we talk about it on blockchain side, but it's also as important on AI, if not more important, because right now all the AI models are trained in kind of for benefiting the corporation that trained them, right? And all of the, all those big labs are really big public companies. They all need to, post more revenue every year, every quarter. And so they need to actually, increase how much revenue they're getting. And remember, most of them already maximize their target market, right? It's not like they can add another billion users to their audience. So they kind of need to actually get more money out of the same users, right? So all of these AI models, one way or another, will be used to actually extract more money from the same users, right? Which are us. And so that's, I call it like corporate AI. And so we need a version that's actually more focused on you, right? And kind of, again, gives back sovereignty back to the user. And so this is what we call user-owned AI. And so user-owned AI builds on top of user-owned infrastructure, right? The user-owned data, user-owned assets. And so you kind of like linking all of those pieces together. Now, the other concept is what we actually worked at Near AI back in 2017 is AI development. So the reality is kind of the current interface, like as a software engineer, you write some code, you're learning the machine learning, you're learning the machine's interface. But what kind of these AI models are showing us they can do, they can teach machines to talk in our way, right? They can teach them semantics of our own world and kind of language. And so what the transition is happening, and again, I was too early on this in 17, but I also, for context, I've tried to build my thesis around this back in university. That was also too early, but I've been trying to do this for many years now. But the reality is, like, we will be able to tell computers what to do, and they will do it, right? And they will write code to do it for themselves, to communicate with each other. And so a lot of the coding process will be replaced from needing humans to be like, anyone can actually build software. Now, that changes how we interact with computing. This also changes some of these cost structures, right? If we're talking about like, how much it costs to maintain infrastructure, if you can just like talk to a machine to tell it what to do and to rewrite, half of the software around you, well, the costs for that will be way lower. So that's an important, note there, that some of the cost and speed with which you can do that will change. But at the same time, so those are two really important concepts. That's actually what we're working on at Near AI, is like we're kind of building the infrastructure and stack for user-owned AI together with a lot of projects in the ecosystem, right? So we're not trying to do it ourselves. We have, incubator, we have a lot of projects we're collaborating with. They plug it into the platform we're building, and we're also offering it for people to use. So, and we kind of have a alpha right now that's running. And then on the other side is like we're using this stack to make progress on the research of how to build AI developer, right? And from what we see now, the front end part is getting easier and easier, right? We already see like you can build front ends on the fly. You can like click on button, say this button should like send a transaction on chain. Boom, it wrote the code for it. Now it works, right? So that part, like similarly, for smart contracts, like some outlining logic, etc., it's not there yet, but there's a lot of interesting work there. And there we also testing a lot of formal verification. And this is the other concept. So most of the code right now has bugs. Like the software we're using right now has bugs, right? And some of these bugs are critical vulnerabilities that can be used to do something bad, right? AI is actually getting better and better at detecting these vulnerabilities because it's seen all the code and it's seen vulnerabilities, so it can actually pattern match really well. I did actually run the test myself and found like vulnerability in some Go compiler. And what will happen is, like, if this continues and we don't fix it, we're actually going to have more and more hacks, right, happening. Now, in crypto, we actually been working on this because we have the situation where a lot of money are at stake and we need to actually have very correct code. And so we have been working on formal verification research for this specific reason. And so the kind of one of the dimensions of work we're doing is how to use AI to do formal verification, and smart contracts is the first use case, kind of because it's like straightforward and valuable. And this is the way we believe kind of all the future software will be built. Will be built by AI with formal proofs, and formal proofs have this like nice kind of similar to ZK proofs property that, if you have some requirements and you're using some other code which has a formal proof, if it doesn't match, if there's something incorrect there, it will just not like proof will not be correct, right? You cannot plug it in. So all of that, like pieces, piecing all this together, kind of the vision is really to have an open source kind of user-owned AI ecosystem. It's going to be lots of different projects coming together, competing, providing different properties, and at the end benefiting the user. Again, sovereignty in the hands of the user. And then one of those use cases will be an ability for a user to build software without writing code. And so that's kind of research we're working on. But what this enables now is completely new experiences, right? Where, the chain abstraction will be like next level from chain abstraction, right? Now you can abstract user interfaces as well, where you can on the fly generate a front end that, interact with multiple chains, with multiple, APIs, etc., and gives you the experience that you want at this moment. And so you can imagine, it even predicting that you want to interact with something and kind of generating that on the fly, or you saying like, hey, actually, I want to do this right now. Boom, you have this custom front end. So we have a few projects that are working on different angles of that, right? Like for DeFi specifically, like, hey, can we like combine all the front ends? Can we have chain signatures together? Boom, now you have with AI can like navigate that and initiate transactions, like initiating transactions with AI, initiating kind of interactions, etc. So all of that is in progress, like in different versions, so we can like start to see how it will work as it ties together. Again, it's kind of one level above even chain abstraction, where you're kind of abstracting the whole computing with natural language, but chain abstraction serves as a big function of that, because we do need to move to a more trustless kind of world, and that will be the big fundamental piece to power that. I just went on like a 10-minute rant, I think so.
Yeah, I mean, just real quick, couple things. I feel like some of these companies that are charging for services that can use AI are going to have to like kind of shift their business models, or like figure out how to incorporate AI and keep an edge. You mentioned audits and some of these other kind of areas. So I think that's interesting. I also think how you mentioned that like Near in particular is set up for the expansion of AI based on how your blockchain is built. It'll be very interesting to see how other kind of types of companies accelerate more than others with the use of AI, and kind of which adopt it and kind of, instead of shying away, really kind of like embrace it. Those are my two first main points. But yeah, Rob, would love to get some esoteric entropy-based takes here.
I love the idea of user-owned AI. I think there's issues with the AI programs that we've seen out there now, and they're owned by corporations, and they're operating based on the interests of these corporations that are profit-seeking, and they've shown behavior of preying on their users and extracting value from them. So the idea of user-owned AI, I think, makes a ton of sense, and I'm very curious to see how the incentive model will change when we have these AI agents that are acting on our behalf. Maybe they have. I think these AI agents end up having these the value that it can provide is going to end up for one. Okay, so zooming out, I think one, that there has to be an incentive for some platform, because people aren't going to have the technical knowledge to deploy their own AI. So there's going to have to be some GPT model type platform that'll allow them to deploy their own AI agent. And then it's a matter of how they want to optimize it. And that'll be the specialized value that it provides to other AI agents. And then how those AI agents interact with these closed source corporate owned ones. I think there's this alignment problem or potential problem where like, for one, how do I make sure? I think it's pretty obvious that my interests are not totally aligned with the corporation. And so if the corporation deploys the AI, my interests aren't aligned with that agent if it's acting in the best interest of the corporation. But what if we have like this extrapolates to the end user, but let's just start with two corporations, right? That each have their own AI agents, and maybe they have contradictory interests. What's to say that one isn't able to convince my AI agent isn't able to convince your AI agent to like do something in my best interest rather than your best interest? I think those natural competitions are going to evolve, and how those things come out, I think is going to be really, really cool to see, because we're going to end up with these AI agent competitions. And I think we're hearing a lot about, so I think user-owned AI, once I have my user competing against other users, there's going to be a very natural, like healthy competition of like me specializing in one thing, providing value to your AI agent, paying AI agents, paying one another to do that. And there's going to be a whole economy that emerges as a result of that. And I think it's natural for that to happen, especially when it's user owned, for that to happen on blockchains, because it's already a natural place for economies to emerge, especially for open source technology and incentives.
Well, and in general, like AI agents have trouble like doing finance, which is not on blockchain. So it's just like so much more straightforward to plug them into an account and then have them transacting than doing that with Stripe or with like any other infrastructure. And like you can start them, they can be like, semi-autonomous, they can raise their own money potentially, right, by launching a token and like pay their suppliers. Like they can do all this work, and like you can go from this is my agent to like this is a fully autonomous agent that just raised its own money and now providing a service as like a and monetizing it and redistributing profits to the token holders, and it's not a security because it's not controlled by anyone.
Do you think it's like still aligned with the entity that deploys it, or do you think it is totally autonomous?
Yeah, it can be like completely autonomous. And so like we're building enough infrastructure so that like you can trigger LLM from on chain, right? You pay for that on chain. And so you can have a smart contract that literally does all that, and kind of if it have enough money, it will be able to do it. If it mismanages its money, it's done. And you won't have some oversight. So like token holders can have governance power. They can provide feedback. They can provide training data for this AI agent. And I actually pitched this idea as like AI CEO, right? So you have like AI that you have a board members or, token holders who can like vote on, what is doing well and not. But then it actually goes and executes day to day, does like day to day work.
Yeah. In the extreme case, that looks like AI president. But in the less extreme case, that I think is somewhat, I've heard this idea where these AI accelerationists are trying to basically come up with AI or AGI, and then if it's the AI for the company or the corporation, then you just ask it, because like you just ask it how do we optimize for revenue, right? And you generate the AGI, and then you use it to basically be the CEO of the company. Are you one of these accelerationists or decelerationist? How do you philosophically view this?
Vertex Edge is now live on Say Network. Say users can now trade 50 plus spot and perp markets with the unified order book liquidity of Vertex Edge across Arbitrum, Blast, Mantle, and Say. The next 6 weeks, 850,000 Say tokens will be up for grabs as trading rewards every single week, exclusively on Say. Join Vertex on Say Network now on Vertex Edge. That's vertexprotocol.com.
Yeah, I mean, I'm definitely not a decelerationist. I think I'm like the way I see this is how like kind of through the sovereignty lens, right? So the user and community. Like I mean, when I say user owned, it also includes communities of people as well, right? So because I think it's important to balance the individualism and kind of more of a community feel as well. And I think it's important that like right now the way the acceleration is kind of movement is just like, let's go, right? It doesn't matter how, let's just like improve the technology and it doesn't matter how it's going to be applied, right? And so like that part I don't agree with, because I think like if we mismanage that, then we're going to get into like concentration of power and kind of, and we know that power corrupts, and this is going to be absolute power, so it will corrupt absolutely, right? So we'll have like one or maybe like two entities which are like controlling intelligence, and through that are able to reprogram everyone. So like I do think it's important to have this technology built in a way that is owned by everyone, and everyone can kind of keep everyone else in check, right? Like if you have an agent on your side and like it's cryptographically on your side, then if somebody else is trying to misuse this technology, which people will, like you have as much pretty much capabilities to protect yourself, right, from this, and you'll have more people and more kind of capacity to protect. So like we go back into the blockchain side, you want more people on a good side than on a bad side, but all have the same kind of level of capabilities. Because if we only have like one or a couple parties that are able to do that, then we kind of screw.
Yeah. So what's to stop people? Like I know, for example, right now in California, there's like an AI law being discussed about kind of like control. But what's to stop in the similar way of like the space race for going to the moon, or for kind of getting nation states technology in space? Same way with crypto, where nation states kind of don't want to ban it, but don't want to, some will accumulate, some won't. What's like, is there a way in which we police AI that is fair and adhesive, or like is a part of its growth trajectory without kind of like stalling the growth? Or how do you view the tragedy of the commons question, which I'm sure you get a lot when it comes to AI?
Yeah, I mean, I definitely think just like a pure political regulation is not enough, and it's not going to be effective, right? Because it's actually just stifles innovation. I mean, we're familiar with it in crypto, right? Because like every time, by the time they figure out what to do with like this instrument, right? We already invented 500 new instruments, because it's like, oh, you want a packaged yield that, repurchase itself, 3 times a day, and, shorts on the back end is like, what is this? Like we just invented a completely new instrument. Now somebody needs to go and like analyze if this is like a security or a commodity or whatever, and options or future. No, it just doesn't work like that. You need a new way of kind of modeling it, and it needs to be product first. It needs to be user first, right? And I think for many of these regulations, they're like, let's cover our ass and let's like protect the government, versus like what is actually benefits the user. And so I think like with actually Bitcoin, what you mentioned, right? Like some accumulate, right? And some, maybe like not, and kind of trying to ban it, but at least that's an incentive mechanism, right? Like, some people see it and so they'll benefit because like in the long term, they were early on. And so so I think like we need similar structure where we have incentives to do good things and detect when bad things are done, and, leverage the same technology and kind of in a way leverage the also kind of cryptography and other methodologies to protect it. So to give you an example, right, we have deep fakes, right? Anybody can generate a fake video, fake image, fake audio now. And there's a very kind of straightforward, although hard to adopt methodology, which is, well, if you're a company, you should sign all the content you publish. If you're government, you should sign the content you publish, right? White House actually at some point started signing videos they publish with cryptographic signature, because now it doesn't matter if they published a deepfake, this is published from their perspective, right? Or whatever, like Elon Musk published something, like it's Elon Musk's signature, it's not a signature of whatever, whoever is in that video. So like we're recording this, we should like auto sign at the end the content. And now, like, if anybody wants to look at this, recording, they can see like, oh, actually, Illia signed this, right? And this is like, kind of, here's the provenance, etc. So I think like part of it is also thinking through, okay, we're going to be in a world where, like the traditional way of like, oh, I'm giving you a piece of paper and you can trust me because it has a stamp on it, doesn't work anymore. But we've been on this world for a while now. It's not a new world. We're just kind of being like lazy about like adopting technology to really deal with that. And AI is just like kind of putting it in overdrive. But like, Photoshop, fake documents, etc., all of this existed before. We just now can do it at like way larger scale. And so I think that's important to just understand. We need to build systems and kind of our society operating system into this post AI world now. And cryptography and crypto economics is the way to do it. It's like fundamental building blocks to build this, kind of software of our society.
I'm not super confident in the government to implement that standard. I think you're right. Like, political regulation is not enough. We need cryptographic regulation, and that signature that we could put into any sort of content is an example of cryptographic regulation or verification that can be embedded. And then I think there's further verification that can be taken on chain by proving certain actions of AI agents. And I think that's probably the way to stop any kind of like rogue AI from misaligning with its creator, individual, corporate, or otherwise. But that gets really hairy when smart contracts start deploying their own AI agents, and it's sort of 2 or 3 steps removed from a human.
Yeah, but then we start getting way too many app chains without the proper interoperability, and then we have another podcast about it. Too many app chains.
There's the agent chain, and then it's all downhill from there.
Well, Illia, it's been a pleasure, man. Thank you for coming on and sharing some time. I think it's a good place to wrap here. Really fun conversation, and appreciate your insights. And I hope you enjoy the time off.
Thanks, guys. Thanks for having me.
Cheers.
Thanks, man.